From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for June 30th, 2016. In today's video analysis, we're going to be looking at the NZDUSD, the New Zealand dollar, versus the US dollar. Starting here on the daily time frame, we can see that over the past several months, we're going all the way back to September, October, November, where we made the lows down at the bottom of the chart. We've seen this currency pair on the rise, and the black trend line gives us a clue to that rising trend over the past several months. However, over the past couple of weeks, really since last week and last week's Brexit news, we saw a little bit of a shift in the momentum where the market fell on that news. We saw the market reach a high all the way up towards the 7,300 level and significantly fall off on that news. The question is this going to be a sustained move lower? Are we going to see a change of the overall trend? Or are we going to see the market return back to its old ways and continue the upside? So those are the two questions that we'll need to look at over the next couple of weeks. Zooming it back in here on the daily time frame, let's go in twice. We can look back to the left, right over here where the red circle is, and see as the market made a significant rally into that blue shaded area between 71.25 and 71.60, it found resistance and some short-term reversal all the way back down here towards the orange zone into the 6,900 level. Then over the next several days took another rise, making the highest high right before the Brexit news, and of course on the news the market pushed right back down to the orange shaded area. Well, here we are again, rising back into that blue shaded area and the 71.25 level. So what we're looking for often is lower risk and higher reward opportunities. Obviously, if you were going to buy this currency pair, the best place to buy it would have been down at the orange shaded area, but that would have been difficult to do against the bearish pressure after the Brexit news. So buying it right now, it needs to go back down, either back down to the purple zone or even back down to the orange zone before you would expect a new opportunity to go long with lower risk and higher reward. Well, really, the next opportunity to do that, other than it going down, would be the breakout of the current resistance. Clearly, this is resistance. It's where the market has exited buys and entered sells before. So we're looking for that opportunity right now. We're into resistance. Your risk reward is much better in the favor of going short than going long. Of course, we also often look at other commodity pairs or commodities like oil when we're looking at New Zealand dollar, Australian dollar, Canadian dollar. And we know that oil has hit a recent resistance high over the past couple of days. And if it continues to hold that resistance high, we could look for oil to take a drop back down. So if that happens, we might expect the Australian dollar, the Canadian dollar, maybe even the New Zealand dollar to take some turn lower again as well. So the blue zone is our main area of focus. 71.25, 71.60 is our main area of focus. As long as it's underneath there, it just doesn't make a lot of sense to go long. It makes more sense to look for an opportunity to go short into the resistance. And over time, it may develop into a head and shoulders pattern. We spoke about that during the live trade room yesterday. The red circle being your left shoulder, the black box at the top at the highest high being the head, the right shoulder developing over here on the right hand side potentially. Of course, then we would also look for the breakdown of the orange shaded area, their last support lows, and that would be our next confirmation of reversal here for the New Zealand dollar. So we definitely are looking at resistance today. We know we don't want it to break above 71.60. We want it to turn back lower, head back down towards the 7,075.50 level, the purple zone. A break under that purple zone will look for the market to challenge back towards the orange zone. Again, I don't think that this is a great place to go long, but a more lower risk, higher reward opportunity to go short. Take it down to the 4-hour time frame. And again, look at the resistance here. In fact, yesterday I took a sell into the 71.25, was able to see profit down to 70.75, or actually didn't make it all the way down there. It went down here into the 7100 level, went back up, took us out, and then went down to 70.75. But here we are again, another opportunity. So I have gone ahead and taken a sell into the 71.25 level. You can see the trade going down at the bottom of the chart. currently sitting about 6 or 7 pips on the trade. Any bump into the blue zone becomes an opportunity to go short, targeting the purple zone, then again targeting the orange shaded area on the way down into the 69.80s, and of course looking for that further evidence of reversal of the breakdown of the orange shaded area. All in all, our risk is that it pushes above the blue zone. We know what the risk is, we know what the potential reward is, and so we'll take that opportunity today looking for going short on the New Zealand dollar.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.